Everybody, welcome back to the channel. Hope you guys have been doing well. In this video, we're going to use the same outline I used in a previous video. We're going to cover macro, TA, then I'll dig into Web3 tokens that are on my watch list. I'm sure by now you guys have heard about what happened with Tornado Cash, and I think that's going to be the catalyst that leads to more innovation and more money pouring into Web3 infrastructure. And I think this is one narrative that isn't being paid attention to at the moment. It's being neglected, but at some point I do believe that's going to change. And lastly, I'll cover a GameFi project that I think everybody should have on their watch list. And before we dive into this video, don't forget to join my Discord by clicking the link in the description below. Like I've mentioned in past videos, it's a great way for you guys to network and get ready for the next bull market. And I'm also looking into potentially integrating a GameFi project that will hopefully allow the users in my Discord to monetize the time that they spend engaging. With that, let's go ahead and dive into this video. All right, so the big number that came back recently was the CPI. It was estimated to be around 8.7, but it came back at 8.52. And unsurprisingly, the markets rallied off that. And the reason I say it's unsurprising is because last month we had a bad CPI. The market initially responded negatively to that, but it eventually rallied up. And then the Fed confirmed in July that we're going to do a 75 basis point hike. Leading up to the announcements, the market sold off, but soon afterwards it rallied. And then we had a negative GDP print, and it happened to be the second negative GDP print that we got. And again, the markets rallied. And then after that, Nancy Pelosi went to Taiwan. We sold off a little bit, but soon afterwards we rallied again. And I said that when the market doesn't hit new lows on bad news or doesn't trend down, that's typically a sign that we've probably hit a local bottom and we're likely to hit new local highs. So it makes sense to me that now that the market thinks that we've potentially peaked, and we don't have any major events until September. September 13th, we have CPI, 15th and 16th, we have the merge, and 20 and 21st, we have the FOMC. So there's a decent chance that we may sell off ahead of these events, but until then, I think the market is going to take the opportunity to go risk on it, especially coins that are being perceived as ETH merge plays. We've seen Lida go up by a factor of 6. We've seen Ethereum more than double. We have Optimism that's gone up over 3x. Ethereum Classic has also gotten a bit. It's up from $10 all the way to $40, and it's looking like it could potentially go higher. And all of this is clearly reflected in the ETH BTC chart. So if you think this is a bear market rally, the coins you want to short are the ones that have gone up the most. Now, unlike the bulls, I'm not 100% sure that we're going to see the CPI continue to trend down moving forward. I mean, let's take a look at the CPI trend in the 70s. During the 70s, the CPI went above 5, came down by about 50% before quadrupling to above 10%. It again began its trend down, and then it began its ascent up to hit approximately 15%. So even if we continue to get a trend down, I think it's a little bit too early to celebrate. We'll have to wait and see how sticky some of this inflation is. And additionally, the other thing that people aren't talking about is the QT that's going to begin in September. Joseph Wang is a former senior trader on Fed's open markets desk. And Wang warns that September and beyond is when something is apt to break. Not unlike what happened last time when the Fed embarked on QT and the chaos in the repo market prompted an early end to the program. It's also when the Fed officials may decide whether to outright sell MBS, mortgage-backed securities, but he also notes that a recent hint by the Treasury that it may buy back older, less liquid treasuries could help QT go a bit more smoothly. Some strategists are more worried, like Solomon, head of quantitative equity strategies North America. He says markets still aren't fully factoring in QT. And that's in part because in order to bring down inflation back to 2%, the Fed needs to shrink its balance sheet by about 3.9 trillion, significantly more than what investors expect. By his calculations, QT alone would amount to 4.5% points in additional rate hikes. He further states, I don't think there is an appreciation for QT by the markets or the Fed. In the end, if QE mattered, so will QT, referring to the big lift quantitative easing gave to risk assets. It may not be totally symmetrical, but there will be meaningful impact. And I think there's some credibility to what he's saying. I mean, if you look at the history of the stock market dating back to around 2008, 2009, Fed net liquidity increased, it continued to increase, and you can see that the stock market went up right with it. We crashed after COVID, they unleashed QE, and we saw again the stock market go up despite the fundamentals in the market deteriorating. And even as of recent, we've seen that correlation stick. This tweet I published on August 1st shows that as soon as the net liquidity started to drop, so did the stock market. And the recent bounces that we've had, they've all coincided with Fed net liquidity increasing. And if you guys have TradingView, you guys can just come to my tweet here, click this link, and you'll be redirected to this page here, and you'll get the formula used to create the chart that you see here. It's basically the Fed balance sheet minus the sum of TGA and the reverse repo. And if you scroll further down, you can actually see the script here at the bottom. So in summary, I think everybody's focused on CPI. Perhaps it's peaked, maybe it hasn't, probably continues to trend down, but I think nobody's really focused on what's about to happen in September. Everybody is just paying attention to the numbers that are published. And even if you go on crypto Twitter, on YouTube, nobody's really having a conversation on net liquidity and its impact on the market. Now, in terms of TA, what really impressed me about Ethereum is the fact that back in May and June, it was showing a tremendous amount of weakness. Meanwhile, Bitcoin was showing or demonstrating relative strength, and now we're basically seeing the reverse of that. We're basically seeing ETH lead. And historically speaking, when ETH has led, it's not been a very good sign. You usually saw a correction soon afterwards. This time, you're seeing it lead, and you're seeing a lot of alts and even Bitcoin follow. Now, I think large bag holders of ETH, they obviously have a bias and they want Ethereum to one day flip Bitcoin. So they're definitely welcoming the shift. But in my view, it's a little bit premature to celebrate because in the past, we've seen catalysts cause coins to rally higher than they normally would have. I remember back in 2019, we saw Litecoin go from 20 bucks all the way to 140. It went up 7x. And that was on the back of the halving that was going to happen in August. I'm pretty confident that was front ran. A couple of months ahead of the halving, it sold off significantly. And so I think there's a reasonable chance that you may see a similar outcome with Ethereum. You see all this excitement and exuberance, partly because we have the blackout date, we have this free period where we don't have significant economic data coming out, and then we have the merge plan for the 15th to 16th. And on top of that, FTX actually removed a significant amount of Ethereum from their order books around June. So the liquidity is thin, you have a catalyst, and you have that blackout period. So I'm personally not convinced that this is a new paradigm, that ETH from now on is going to lead rallies. So I wouldn't be surprised if for the next 2 to 4 weeks, we continue to see the market rally up. I mean, some of these altcoins are primed for a good push up. I mean, FTT, Bitcoin, Sol, CRX, I mean, a bunch of these charts are looking identical. They're looking like they're getting ready for a big move up. At this point, looking at crypto Twitter, YouTube, and even in my personal life, my dad decided to get exposure to crypto. He bought some Link. So I'm confident in saying that retail market participants are re-engaged. They're definitely placing bets if they haven't already. And typically you see retail buying in the last impulse up. And that creates the conditions for a really good alt run. All right, moving on to the next segment of the video. I'm sure you guys have all heard about Tornado Cash. I mean, this is just the beginning. A lot of us that were early into DeFi, we all expected something like this to happen. And that's why I've always been bullish on Web3 infrastructure. The problem was that we didn't really have any compelling needs to implement it right away. But now after witnessing the events that unfolded after Tornado Cash got sanctioned, everybody in the Web3 industry, everybody in the crypto industry that's genuinely passionate about decentralization and about censorship-resistant technology, they're going to all mobilize and begin thinking about defense. Now, I don't think it's a good idea for these organizations, these protocols, to challenge the US directly and just disobey everything that they say. But what I think they should do is comply as much as they can, but behind the scenes work incredibly hard to bring these decentralized Web3 infrastructure protocols to life. On a side note, I think these sanctions were a net positive for the industry because humans in general don't do anything until they have a compelling reason to do so. And now with the Tornado Cash incident, you're going to see people in the industry act a lot faster than they would have otherwise. So for those reasons, I can confidently say that a lot of money, capital, talent is going to pour into the Web3 infrastructure space. But the problem with investing in a lot of these projects is that the tokenomics are horrible. I think the exception here is probably SSV. The tokenomics are designed to compensate people for supporting the network by operating nodes. The problem with doing that is typically running these nodes have infrastructure costs. And so if they run it like a business, they have to sell some of the tokens that they're getting to cover the operational cost. And so when we're in a bear market and everything is being sold, you get a lot of reflexivity to the downside because node operators that may have held on to some of their tokens instead sell all of them so that way they can cover their cost and they can avoid a drawdown. Because imagine getting paid $300 and like a week or two later, it's gone down by 50 or 75%. So just like with Bitcoin, when miners are selling aggressively in a bear market and holding and maybe leveraging up in a bull market, you're going to see something similar happen with the node operators of these various Web3 infrastructure projects. And I just wanted to get that out there because even though I'm bullish on Web3 infrastructure, I'm not entirely sure what's going to be the best time to buy in. But if you look at most of these tokens, like Poked, for example, they're down over 90% from their highs, and in some cases have remained flat for months. So I suspect that we potentially could be in an accumulation phase, but if the broader market takes another leg down, there's a potential for these tokens to go down another 50 to 70% from their current levels. And I'm not going to go into these protocols in depth. Maybe in the future, I might make a video. If you guys are interested in seeing a video review of one of these platforms, make sure to mention that in the description below. I have done one on SSV. I actually run a node on their testnet. If you wanted to learn more about SSV, make sure to click the video linked in the description below or the upper right-hand corner of your screen. So these are the 5 projects on my watch list. The first is Graph, ticker GRT. It's a protocol for indexing and querying blockchain networks like Ethereum and IFPS. It's often called the Google of blockchain because instead of searching the entire block, the indexing can help you narrow down your search and quickly retrieve the data that you're after. Next up is Pocket Network. It's the TCP IP of Web3 node infrastructure. It's basically a decentralized RPC protocol. Most of the RPC services that are currently used, like Infra, are incredibly centralized. The government could easily ask them to shut down services for a certain platform. So if they end up delivering, they're going to be an incredibly important piece of technology. And the thing I like about Pocket Network is the fact that they're already working with a lot of different chains. I mean, if you just look at the data, you can see that they're being more widely used, not only by different chains, but also by DeFi protocols like Aave. Next up, you have SSV Network. It's often referred to as distributed validator technology, which enables trustless staking through multi-operator validation, improves the resiliency of the staking services by reducing a single point of failure. Basically, they're splitting up the keys to 4 nodes. And so if any one of those nodes goes off, another node will go ahead and take its place. This way, you reduce the odds of getting slashed. And that's why I think Coinbase Ventures invested in them and Binance started supporting their token early on, because this is something that a lot of them will want to use. They want to make sure that their staking services are secure as possible, that there's no single point of failure. And if this is something that's widely used, the token is going to be in strong demand because in order to vote in the DAO, you're going to need some of these tokens. And given the importance of the service that they're rendering, you want to make sure as an exchange that you have influence over the DAO. Next up, you have Elf, which is an open source cross-chain decentralized cloud provider. And that's pretty straightforward. You also have Akash that's doing something comparable. Lastly, we have Genesis Go Shadow. It's a trustless, decentralized layer designed and optimized for Solana. They're also building ShadowNet on top of this. It's a storage network that will allow developers to deploy private instances on Solana
So in other words, basically deploy a private subnet. They are planning to go cross-chain, but initially their focus is going to be on Solana. I'm mostly bullish on this because of the founder. I mean, he's incredibly hardworking, very active. He seems like the type of person that makes up his mind to do something and then does it. He also started an NFT project called DGods. And even though it came out kind of late in the NFT cycle, it's become a blue chip. And in fact, I think it's probably #1 in market cap. And on top of that, I've also noticed a lot of interest from VC. Multicoin specifically seems interested. They bought a lot of the Genesis Shadow NFTs. Last I checked, they had a massive bid for the Shadow token. So even though it hasn't performed well in the bear market like a lot of these Web3 infrastructure tokens, it's another one that I'm watching very closely because I think if you're bullish on Solana, this is like a high beta play. It's almost like investing in Link because you're bullish on Ethereum. All right, in this last segment, I'm going to cover a GameFi project on Solana called PanzerDogs. PanzerDogs is being produced by a gaming studio called Lucky Cat, and they have a very large portfolio of gaming projects under their belt. They've built the following games with over 200 million downloads. So they already have a track record for success. And now they're building 2 more games, but these are going to be more Web3 oriented with NFTs and tokens. They've secured approximately $3.4 million from investors in the ecosystem. For example, Solana Labs, Miston Labs, Big Brain Holdings, Magic Eden. And I think the reason why all of these investors have piled in is because they've already built successful products. They just have to build the Web3 iterations of them. I think distribution might be somewhat of a problem. Let's say they produce a mobile gaming version. Marketing it to their existing user base might be a little bit challenging because in order to accumulate tokens that they've earned in the game, they're going to need a wallet that supports SLP tokens. And one move that they made recently that I thought was pretty good was the fact that instead of creating a token or selling a token to investors that can only be used in PanzerDogs, they decided to come up with the portfolio token. And all the games that they produce will be using this same token. Because in their minds, long term, they're creating a metaverse. They're working behind the scenes to launch the token in Q4 of 2022. That's when I expect them to host the public sale. The mobile version of the game, it looks like they've already made some progress on it. It should be coming out sometime in Q3 2022. But I did want to highlight the fact that they did expect the mobile version to come out in the last quarter, but obviously it didn't. So there's always a chance that they might be delayed. So don't make any plans around a Q3 release. Like I've mentioned in past videos, the nice thing about these Web3 gaming projects is that you can actually play the game as it's being developed. In many cases, you have to hold the NFT in order to get early access. And in this case, they're actually being a little bit more open-minded and inclusive. They're also allowing people to play even if you don't have an NFT. And one thing that I really liked about the project is that they're giving a lot of tokens to the community. Early supporters, the community, staking, that actually constitutes the majority of the tokens. Now it looks like the token that's going to be sold to investors is different from the token that you see here. But if I happen to be wrong about that, I think this is an incredible opportunity. I'm actually waiting on the team to respond to a message I sent them, because if I'm able to earn some of these tokens by buying the Panzer NFT, I might be open to buying, 10 to 20 NFTs just to earn their portfolio token for staking my NFTs. And if you come here to Soul Sniper, you can see that a lot of people who bought the NFT have held it. Out of the 6,000, there's only 140 listed. And just like altcoins, when you see this type of price action, it means that the NFT is being accumulated and very little of it is being sold. You can also buy their tanks. There's about 143 listed. The tanks are currently trading at 0.56 Sol. Now, if you buy the NFT, in addition to the staking rewards that you get, other holding benefits include a fun representation of the player during PvP, allows for tank part crafting benefits such as higher crafting speeds and unique influences depending on the avatar traits, early access to the bootcamp demo and other beta releases, early supporters holding the dog avatar eligible for tank airdrops, holding both avatar and airdrop tank makes you eligible for sponsor token airdrop. A snapshot will be taken of wallets in Q1 of 2022. The amount of tokens airdrop scales with the amount of avatars tanks held in the wallet. So unfortunately, you guys will be too late for that. Holding both avatar and airdrop tanks makes you eligible for pre-IDO whitelisting. Another snapshot will be taken of the wallets. Holders will get token allocations to be purchased depending on the amount of avatars and tokens in their wallets. Earning benefits such as XP boost, allowing holders to level up faster and get more rewards. Eligible stake avatar for rewards such as tokens and tank parts. Now, these types of mobile games really rely on players buying in-game upgrades and basically allowing them to expedite their gaming experience and by leveling up and acquiring certain items faster. And the cool thing is that players who don't have money to, let's say, buy the NFT, let's say they start from scratch and work their way up, they can actually accumulate tokens, sell that on the open market for SOL, and purchase these NFTs. So if they're successfully able to produce a game that has a high replay value, and you have only a finite amount of NFTs and tanks that players can purchase, with the floors being as thin as they are, I wouldn't be surprised to see some of these NFTs go up 10 to 100x as GameFi makes its way into mainstream. Now, I could have covered a lot more in this video. If you guys wanted a more thorough review, make sure to mention that in the description below. Also, give this video a like and subscribe to my channel. It gives me the dopamine hit that I need to continue producing content for you guys. And again, make sure to join my Discord by clicking the link in the description below. Oftentimes, you'll hear about these games in my Discord prior to me publishing the video. And if you wanted to join a more exclusive community and interact with Giga Chats, then definitely check out my Patreon by clicking the link in the description below. For just $20 a month, you'll get a free subscription to my newsletter. Plus, you'll get access to my inner network of experienced crypto veterans. And in there, you'll find alpha on NFTs, on GameFi, on tokens, DeFi, pretty much every category you can think of in the crypto industry. With that being said, this is CryptoOneStop signing up. I'll talk to you folks next time. Bye.